Thank you. Thank you, Ashwini. Good morning, dear all. I welcome you all to this webinar today. That is a Thought Cafe webinar series. My name is Ashwik and I'm the incubation manager at Atal Incubation Center Coffee Board. So to start with, I'll give a brief intro of our incubation center, that is Atal Incubation Center. So Atal Incubation Center was established in the year 2020 at the Coffee Board in collaboration with the Central Coffee Research Institute and Atal Innovation Mission. The primary objective of this incubation center is to support and nurture startups in the coffee sectors that are focusing on addressing critical challenges. We as an incubation center provide mentoring support, funding assistance, marketing support, and conduct capacity building activities to help startups scale their businesses. As a part of these activities, we organize various webinar series, and today we are hosting this Dot Cafe webinar series that is actually aimed at providing valuable insights, strategies, and expert advice essential for successful launching and growing up your business or startup. So I welcome you all. I would like to I would like to ask Ms. Jaya to give a brief introduction about our resource person today. Jaya, over to you.
Good morning, everyone. This is Jaya. I'm intern in Atal Incubation Center. I would like to introduce today's session resource person, Mr. Bhaskar, CS Bhaskar Bhatt, Head Secretarial BTA Proprietor Bhaskar Bhatt and Co. He is a member of Institute of Company Secretary of India and currently works as a company secretary in full-time practice. With over 5 years experience, he has a strong understanding of practical aspects and a track record of working with corporate entities. Mr. Bhaskar Bhatt is a proprietor of Bhaskar Bhatt & Co. and serves as a consultant company secretary of her Bloomtree Business Advisor. He is providing corporate consulting services, including funding compliances, setting up foreign subsidiaries in India, closing companies and LLPs, and drafting agreements, term sheets, and shareholder agreements. In addition to providing secretary services, Mr. Bhaskar Bhatt is well versed in foreign investments, FEMA, and RBI companies. I would like to welcome you, sir, on behalf of AIC CCRI Coffee. Over to you, sir.
Thank you for the introduction, and also I would like to thank AIC CCRI and Coffee Board for giving me this opportunity. Let me share the screen. People may dream about starting new ventures or creating startups. And while often they have solid plans, but they may lack the legal guidance or how legal framework for their entity. And they may lack the funding options available in the market and the instruments available for fundraising and how to create a pitch deck or how to make a pitch presentation. So this webinar aims the fundamental structures of the business. What are the legal structures in the business and the various fundraising options and instruments available for fundraising, how fundraising works, what is the flow chart for fundraising, and the associated legal risk in the entity, how to mitigate the risk. So we can cover these points in this webinar. All wants to, start a business. Many wants to start a business, but which business structure is ideal or suitable for your, idea or your business? So the fundamental decision for any business is selecting appropriate business structure. Selecting appropriate business structure. Commonly, business structures involves sole proprietorship and partnership firms, private limited company, public limited company, or OPC or LLP. In this webinar, we have students, research scholars, entrepreneurs. So I want to set a bedrock for this session in the beginning. So what are all the legal entity structures for your startups? Or if you already have the business, are you running the business in the ideal structure? So let us explore the advantages and disadvantages and how to identify the business structure for your business. Let's explore one by one. Sole proprietorship and partnership firms. Now, sole proprietorship matlab, this is your own entity, bootstrapping. There is no other person involved. You have started your entity, and in terms of compliance, there is no much compliance. No need to register anywhere, or I can say less governance, because there is no agreements or there is no set of rules for your business. Less establishment cost and less compliance is expensive, less compliance cost. So it is suitable for a small business. And the ownership, who is the owner for your sole proprietorship? You are the only one who is the owner for your sole proprietorship. There is no one other, and you can take the quick decisions. No need to call for a meetings, or no need to take approval from the shareholders, and there is no other control from other third party here. And in terms of liability, you can enjoy the full ownership. However, in terms of liability, the liability is unlimited. If your entity faces the problem, in that case, your personal assets, your personal income, your savings, your bank balance, your assets are at the risk. You have to pledge your assets if in case your entity faces the problem. So I can say unlimited liability for sole proprietorship. And what about funding? No, it is only a bootstrapping. There is no funding available. You have to make a self-funding or self-finance. So if you have the long-term goal, or if you have the long-term fund needs in your business, then this mode is not suitable for your business. And one more thing, in the sole proprietorship, for example, it is just like your own income. You have to file your income tax in your name only. There is no separate PAN for your entity. So, for example, if you see many, the boards in the roads, and co and associates, many boards, these are all sole proprietorships. And what about the partnership firms? Again, less compliance. If you want to register the partnership, then need to prepare a partnership deed and need to register with sub-register. This is the only compliance. For sole proprietorship, you need a one person for the entity, but for a partnership, two or more persons. Less compliance again, less governance as compared to company, very less governance. No need to file your annual return with any, statutory authorities like RBI or ROC or anywhere. And your whole, the rules and regulations are set in a partnership deed. And what about the ownership? Again, the ownership is divided into, divided amongst the partners. And what about the liability? Liability is unlimited. So you need, if you face any problem, then you need to bifurcate your risk with the partners. You need to pledge your, assets or personal income or personal savings. So unlimited liability. What about the funding here? As compared to sole proprietorship, you can avail the fund from the partners, but you cannot take fund from the outside because there is no concept of shareholding or securities or the instruments of debt here. So you cannot issue the shares to any third party, or you cannot raise the capital in the partnership firms. Again, please note, I need to clarify, wherever I am using startup, I'm using in the general sense. Startup, matlab, your entity is in the initial stage of the development, but there is a separate definition for startups. As per the statutes, the startup is a, registered partnership firm or a company or LLP obtained a recognition from DPIIT. That is a separate concept. That is called startup in the statutory language. But in the general sense, what are the if you start the business, if it is in the initial stage, we call it as startup. So here I'm using the startup in the general sense. Now we have seen the sole proprietorship and partnership form. So these both are ideal for bootstrapping, and there is no funding options available here. You can take the loan or you can take the debt from the outside entity, but you cannot issue the shares, and liability is also more here. If you have the long-term goal or if you have the solid plan with you, so this mode is less suitable for you. What is the third option available with you? Private limited company. Private limited company, this is the best mode for starting your venture. I can say this is a flexible and the most suitable mode for startups. So here in a private limited company, you can issue the shares, you can raise the capital, you can avail the funding from, any third party here. And in a private limited company, compliance is quite more. As compared to sole proprietorship or partnership firm, in the private limited company, more compliance. You need to file the returns annually with the ROC. You need to follow the Income Tax Act. You need to follow the GST regulations. And if the FDI is involved, in that case, you need to adhere with the RBI guidelines. You need to follow the FEMA compliances here and the labor law compliances. So the compliance is more. Again, I can say the governance structure in the private limited company is accurate. Who is the owner of the private limited company? Who is the owner of private limited company? Now, there are two concepts. One is shareholder, one is director. The equity shareholders are the real owners of the company. And directors are the person who steer your organization, who drives your organization, who guides the board or the management, who will take care the responsibility of managing the company. So many times the misconception is the directors and shareholders are the same. No, never. The directors are different and shareholders are different. The shareholders are the owners of the company. And in the next slide, I will explain the kinds of shareholders, kinds of shares. And what about the liability here? Why private limited companies? Now in India, we have more than 13 lakhs private limited companies. We have more than 13 lakhs companies. Why these many companies are incorporating in India? And a monthly, around 5,000 companies are getting registering in India. Why these many companies? Especially in Bangalore, we can see many companies registering nowadays because of startup ecosystem, because of the various fundings and the various the supports available in the market. And the liability in the private limited companies, there is no liability. I can say there is no liability for your personal assets. I can say limited liability. Limited liability means the company is a separate legal person, just like Mr. A, Mr. B, and ABC Private Limited. These three are three separate persons. ABC Private Limited might be a artificial person, but again, it has an existence. The private limited company will get a PAN, just like a human being. The company will also get a PAN, just like your birth certificate. In the company, you will get certificate of incorporation. And just for the business framework, the private limited company will have MOA, Memorandum of Association, and the rule book called AOA. What are all the rules to be followed in the company? What are all the regulations to be adhere in the company or mentioned in the AOA? This is the one of the proper structure to maintain your business. And what about the funding? Again, in a funding, the company can issue the shares, and company can issue the debentures, and company can take the loan, and company can run without, for example, if the shareholders or directors died, in that case, company will be in existence. Their legal heirs will take. So there is no end for a company until you go for a liquidation or a winding up. And the LLPs, the next mode is LLP. Before LLP, I will take one more option here, the OPC. You could have heard the one-person company. One-person company is the part of private limited company, but the only one person is the shareholder. Directors may be one or two or three, minimum one director, maximum 15 directors. And in a private limited company, again, you need at least two directors and two shareholders. And in a OPC, only one shareholder can incorporate or register a OPC. You will have the title as a private limited company only, but in the name, in the bracket, they will mention the OPC, one person company. This is suitable for the turnover up to some 2 crore, 3 crore. But if your plan, or if you have the plan, or if you have the budget, or I can say the cash flow, the future cash flow, If it is more than some 2-3 crores, in that case, it is not suitable. Again, here you cannot raise the point from others because only one shareholder, you need to finance yourself, or I can say it's a bootstrapping. And the next, the business structure is LLP. What is LLP? What is the difference between the partnership firm and LLP? LLP means limited liability partnership firm, which has the characteristics of both the private limited company and the partnership firm. I can say it is hybrid. In the LLP, the partners are the owners of the company, just like a board of directors. Here we have designated partners. What about the compliance? Compliance is similar to the private limited company. What about the ownership? The one person who is the equity shareholder will be the owner of the company. What about the liability? Again, liability is limited because it has the characteristics of the private limited company as well as the partnership firm. And what about the funding? No funding. Again, bootstrapping. And one more option available, the public limited company. When you should open a public limited company? Again, in the public limited company, compliance is more as compared to private limited companies. What I suggest, until you go for IPO, until your series D or beyond will complete, don't convert your private limited to public, or don't register a public limited company, because compliance is more. Again, you need 3 directors here and minimum 7 shareholders needed. So it is suitable for the companies which are planning for IPO. I mean, for example, next year you are planning for IPO, your series are over, series D is going on. Then in that case, you can convert your private to public. But until you don't have the plan of IPO, don't go for a public limited company. Or sometimes the government may ask for a public limited company for some businesses. In that case, that is necessary. Otherwise, the private limited company is suitable for whatever the seed or pre-series or seed or series A, B, C, D. For these fundings, the private limited company is ideal. Now we have some the foundation. What is private limited? What is public limited? What is LLP? When to open LLP? When to open public limited company? Whether I can open a private limited company, or if you're already starting the business, you should convert your business to private limited, public limited, or LLP. Now we got the idea, the basic idea. Now, with regard to funding, what are all the options available? What are all the instruments available in the market for a funding? You may heard of equity share and the preference shares, debentures, convertible notes, loans. In the previous slide, what I mentioned, in a sole proprietorship or partnership firm or in LLP, you cannot get the funding from third party except loans, except debt. So these funding instruments, I restricted it to private limited or public limited company. What is equity share? Equity shares are the equity shareholders are the real owners of the company. If you start the entity, in that case, you should have the equity shares. These are the instrument which uses for long-term finance needs, that not for short-term or a mid-term, which uses for long-term finance needs. Now, you have the private limited company. At the time of registration, you have some 10,000, 20,000 or 1 lakh equity shares. You are the subscriber, you are the equity shareholders. I think you are the founder, you are the promoter of your company. Now, you need a further investment as a equity. It is a bootstrapping, or I can say you are raising a fund from your close networks, not from crowdfunding, or not from angel, not from a venture, not from incubators, but you are raising the fund from your close network, from your closely held group, from your family. In that case, equity share is suitable, because what is the main intention of the equity? They will get the ownership. The unit represents the ownership in the company. They will take the decision. They will have the voting power. In the general meeting, they will vote whether your decisions, if it will approve or it will reject based on their decision. So always equity share, for major equity share, should be with the founders. And how to issue the equity shares. Now I have the private limited company or public limited company. Now I need funding from my family. I need funding from the close group. There are two options available. One is private limited company issuing shares to the existing shareholders. Mr. A, Mr. B, Mr. C are the shareholders. Mr. A has some money. He wants to invest in a company. In that case, a rights issue is the suitable option. There are two modes to issue the funds. One is rights issue. Second one is private placement. Am I clear? One is rights issue. One is private placement. What is rights issue? Rights issue matlab the company is offering shares to the existing shareholders. For example, founders, Mr. A, Mr. B, Mr. C. The company is offering 100 shares. Let us take an example. The company is offering 100 shares to the shareholders, existing shareholders, as the percentage of the existing shareholding percentage, based on their percentage. Someone has some 50%, other person has a 50%. Then if you are issuing 100 shares, then 50-50 shares will be offered to the existing shareholders. Now, what they will do? Now, I have the option. I am the shareholder. I have the option. Either I can purchase those shares, or I can reject those offer. Or one more option, I will give my offer to my friend or my colleague or some other person called renounce. There are three options here. Now you got the shares. What about the compliance? Compliance is less as compared to private placement, because you know about the ROC filings, MCA, Ministry of Corporate Affairs filings. Here in rights issue, we need to file only one form and no valuation report needed. Again, in the next slide or next to next slide, I will explain when valuation report needed, or what is private placement. I will explain. But in the rights issue, private valuation report is not required. It is less compliance, but the restriction is only for the existing shareholders. For example, after 1 day or 2 day, the company needs some money, but they are not taking the loan. They are not interested to take the loan. What they will do? They will issue the shares to themselves only. Then they can utilize the money. They need to file only one form with the ROC. They can utilize the money. They will become, the equity shareholders. And here, if anyone not interested to purchase, what happens? Again, dilution will happen. His shareholding will decrease. This is the thumb rule for equity shares. Now, you are issuing shares to the third party, equity shares to third party. What is the option? Now, private placement is the only option. Here in the private placement, compliance is a bit more. If it is equity shares, you need to take a valuation report. You can have term sheet and SHAs. If you want the regulatory structure internally, you can have the agreements. Then you should obtain the valuation report from the registered valuer. Again, as per the Companies Act, registered valuer. Again, you are taking a investment from the overseas or a foreign person. In that case, FEMA also involved. I mean, Foreign Exchange Management Act also come into picture. Again, you need a valuation report from CA or merchant banker. And if it is income tax, then again, in many cases, 11 UA or merchant banker valuation report is needed. Now, we are clear about equity shares. Now, these are all for the closely held group or the family. Or what about the funding part? What about when the angel investors or incubators or accelerators or the crowdfunding or government schemes are interested to invest? In that case, now you have debentures or preference shares. They can also get the equity shares. I mean, there is no restriction. There is no, the law says they should get the preference or they should get the debentures. But here, the suitable mode is preference, because in the equity shares, when you will get your money back, either you should buy back the shares. That is very tricky. I mean, that is the tricky provisions in the Companies Act. The buyback is not easy. But again, for example, you have met all the criteria, then you can go for a buyback. In that case, you will get your money back. Or secondaries, I mean, you are selling your shares to some other person in the market, then in that case, you will get the money. Or at the time of liquidation, or at the time of winding up, shutting down your business, shut down your business and take your money back. In that case, you will get your money back. Otherwise, these are all the instrument which is with the company throughout the life of the company. So investors are sometimes may come and support you and help you, and they will get back their the investment amount. And or in any case, some midterm finance needs or supports in the long term, they will help you. In that case, preference shares and debentures are the ideal options. Again, in the preference shares, further bifurcated into CCPS CCPS, compulsorily convertible preference shares. OCPS, optionally convertible preference shares. NCPS, non-convertible preference shares. What is CCPS? Compulsorily convertible preference shares. Now the company is issuing a CCPS to the investor. The investor will get the option of converting it into equity. The preference shares will convert into equity after some period. Let us take some 5-6 years. He will have the option. I mean, he will necessarily, it should be converted into equity. The maximum period is 20 years. In the period of 20 years, it should be converted into equity. Now, what about OCPS? Optionally convertible preference shares. Again, here, both the parties have the option. Either it can convert into equity or redeem. Redemption. The company will buy back its shares. In the equity, what I said, the buyback is the only option. It is tricky, but redemption is not tricky. You can file the form. If you have the money, redeem it and comply the terms and conditions as mentioned in the preference share terms. So you can take back money, redeem the money. The company will redeem the shares. They will give you your money. This is OCPS. What is NCPS? Non-convertible preference shares. You don't have the option at all. Within 20 years, it should be redeemed. Redemption will happen within 20 years. So now the investor will invest in the company and they will guide you, they will support you if they are angel investors or incubators or accelerators. They will support you, they will give the whatever the help to you, they will guide you, then they will take that back their money. Here again, for a private limited company, how to issue the preference shares? I already explained the rights issue. For example, sometimes your close group or the promoters or founders or existing equity shareholders want the CCPS. They will, the company needs a midterm finance, then they will do the preference shares allotment. They will invest in the preference shares. They will take back their money. In the rights issue, again, the rights issue is simple. Here, we need to file 2 forms. In the equity shares, only 1 form with ROC. Here, we need to file 2 forms called MGT 14 and PAS 3. Then rights issue is complete. There is no need to open separate bank account here in the rights issue. Your regular bank account in the company is sufficient. You can utilize the money once you receive the investment amount. Once they wire the investment money, you can utilize the money. And the third group, the angels, the governments, the crowdfunding or the incubators or accelerators, you are issuing shares to them. In that case, we need to follow the private placement mode. Again, for a private limited company, private placement is possible. And here, if it is convertible instrument, I mean convertible instrument means the preference shares which will convert into equity, CCPS. In that case, you don't need a valuation report here. But again, you need to follow other compliances like the first, the agreements will happen. Then you need to open a separate bank account. Then we need to file a form with the ROC, then offer letters to be issued. Then money will wire into separate account. Then we need to file 1 more form with the MCA or ROC, and then you can utilize the money. But while the convertible instrument converted into equity, in that time you need a valuation. But at the time of issue, either you can take a valuation report from the registered valuer or you can ignore the valuation report. However, subject to, if it is the foreign person is involved or FDI is happening in your company, then again you need a valuation report from the merchant banker or a CA. So preference shares can be issued either through rights issue or private placement. If it is third party, then private placement. If the existing shareholders, then rights issue. Now we have covered equity shares, preference shares. Now, small doubt, what is the difference between equity and preference? Equity shareholders are the real owners of the company. They will take the decision. If the company calls for a general meeting, then equity shareholders will attend the meeting and they will pass the resolution. They will give their opinion in the meeting. Then what about the preference shareholders? If their right is affecting, in that case, they will attend the meeting. They have the power to attend the meeting. Then why they should choose the preference then? The name itself says preference. You are getting a preference. The company is giving the dividend. To whom I should give the preference? For the preference shareholders. Company is giving the exit option. Who will get the preference? Preference shareholders, as per the SHA or whatever the agreement. The company is going for a liquidation, going into liquidation. In that case, who will get the preference? Preference shareholders. Whatever your the remaining assets, whatever the balance available in your company, first distributing to preference shareholders as per their share percentage, as per their investment. And in the bottom line, or the least preference will be given to equity shareholders because they are the owners. Whatever the balance available at the time of liquidation, they will take because they invested at the time of incorporation or whenever the allotment happens, and they took a decision of the company. So at the end, they will take the balance, but the preference should be given to the preference shareholders. Now, I don't want to dilute my shareholding. What is the option? The option is debenture. Debenture is in the form of debt. It is not a loan. It is not a simple loan from the bank or financial institution. Again, it's an instrument. You can treat it as a debt in the company. They will not get any voting or decision-making power, or they will not involve in your day-to-day business, or they will not come for the meeting or anywhere. And what they will do? They will get the interest. In the preference shares or equity, the shareholders will get the dividend. But in the debentures, they will get the interest because the debenture is in the form of debt. And yearly, we need to pick some interest for them. They will invest in the company and they will get the debenture certificate with them. And yearly, they will get the interest. And either they can convert the debenture into equity, as the preference shares have the convertible convertible in the nature, CCPS, compulsorily convertible preference shares. Debenture also have the same the methodology, CCD, not Cafe Coffee Day, CCD, compulsorily convertible debenture. Here, the debenture holders have the option. Either they can convert into equity, but Again, if it is OCD, they have the option to redeem or convert. If it is CCD, they need to convert into equity. Here, the time span or the period is 10 years. For a preference shares, you can wait for 20 years. Within 20 years, you can convert, or if it is optionably convertible, then within 20 years, you can convert or redeem. Or if it is NCPS, you should redeem the shares. The company should go for redemption. But in the debentures, again, the same methodology. Either you can convert or redeem. If it is a OCD, optionably convertible debentures. If it is a CCD, compulsorily convertible debentures, in that case, it should get converted into equity within 10 years. And what about NCD? NCD, matlab non-convertible debentures. It will not convert into equity or any instrument. It will be redeemed before the period. Here, what I am saying, the 20 years or 10 years, these are the maximum periods. In the agreement or in the terms, you can have some 1 year, 2 year, or certain events you can mention. Either they go for a angel round, either they go for some other rounds. They will get the exit, they will redeem the money, or some series A, B, C happens, they will get their money back. So you can have customize the agreement. You can customize the agreement. So now we are clear about equity shares, preference shares, and debentures. What I mentioned, equity shares can be issued through rights issue or private placement. Preference shares can be issued through rights issue or a private placement. But debentures, you need to follow the private placement route. In the market, there is a different interpretation, but I can say this is a gray area. There is no clarity in the act. And recently, some ROCs, Register of Companies, issued the notices to respective companies saying that why you have issued the debentures through rights issue. There is no clarity. They levied a penalty also. So before taking the risk, I think better to follow the private placement route in the debentures. Now, I'm a startup. I don't want to go for a equity or a preference or a debentures. I just need a money, and I should have some options. Either it will convert into equity or it will be repaid. Nothing valuation report, nothing I don't need. In that case, what option I have? The instrument is called convertible note. Here, I'm referring the startup. Here, the startup means not in the general sense, but you should obtain the Startup India registration certificate from the DPIIT. In that case, the company can issue the convertible note to the third party, but the restriction is he should invest minimum 25 lakhs in the company. In your company, the person who is investing the amount, whatever the investment amount, should be minimum 25 lakhs, and the entity shall obtain the Startup India registration. And one more thing, the period is 10 years. The tenure is 10 years. Within 10 years, either it will convert into equity or it will, redeem. Redeem matlab, they will deposit back their money. This is, I think, one of the best suitable option for startups to get the convertible note. Again, for a convertible note, you can have the convertible note agreement with the parties, because there may be a chance of dispute why it should convert into equity, or why you should redeem back. So better the person who is investing in a convertible note, or the company is taking the convertible note, having a convertible note agreement, and we should file one form with the ROC called MGT 14, because whatever you are passing internally, the government should aware of it, especially in terms of funding. The government is aware of it. So that's why we need to file one form with ROC called MGT 14. And At the time of issuing convertible note, we don't need any valuation report from the registered valuer or any person. And the person sitting in the foreign, I'm an NRI or a non-resident, I'm investing in the company. Then in that case, one more restriction that 10 years tenure is reduced to 5 years. Wherever the FDI is involved, we need to file returns with the RBI, and we need to follow the certain procedures under the FEMA. So we have covered equity shares, preference shares, debentures, convertible notes. Debentures and convertible notes are in the nature of debt. Equity and preference shares are in the nature of shares. The last option is loan. I'm not interested in issuing shares or debentures or anything. Just I'm taking the loan. But here, the entrepreneurs or the future entrepreneurs are opening a private limited company. You should aware you cannot take money from any outsider. Simply you can give me some 10 lakhs, keep it in a pocket. Give me some 20 lakhs, keep it in a pocket. It is not allowed in a private limited company. Only you can take the loan from the bank or financial institutions, or if you are a director in a company, then you can take the loan from the directors, or I'm the relative of director, I'm the husband of director, I'm the father of director, then you can give the money as a loan to the company. And I'm the shareholder of the company, you can give the loan to the company. But for example, Mr. A, they are sitting in the street, and he is your friend. Simply he will give some 10,000, he will transfer some 10,000 to you in your company. No, it is strictly not allowed. It will treated as a non-compliance, and you may face consequences. And especially if you have opened a private limited or any company, nowadays the government is using AI tools, so you cannot hide anything. So simply you need to follow the procedures. Many, I mean, the procedures are simple. The cost is also not, I mean, that much of high. But if it is a non-compliance, the cost is very high. I will tell you, if you are not filing the annual return for your company, then daily you need to pay some 200 rupees to the government. If it is some 1 year, if you forget to file your annual return, then some 70-80,000 you need to pay to the government. Instead of paying 600-700 rupees, 70,000 you should pay. So whenever if you open a private limited company or a public limited company or any the legal structure you are following, it's better to do the compliance instead of non-compliance. Now we have covered all options for funding. In the practical life, how funding works. Here, what initially what the company will do, company will prepare the pitch deck, and they will draft, they will create the pitch deck based on their ideas, based on their cash flows, based on their future projections. They will make slides, and the pitch presentation will happen with the investors. It may be incubators or accelerators or angel investors or crowdfunding or I mean government schemes. But here the major thing we should note: if you are an entrepreneur or if you are a future entrepreneur, you don't advertise your allotments, issue of shares in the newspaper or in the social media. Don't advertise your the funding options, because this is strictly not allowed as per the Companies Act. Many companies got the notice. In one of the company, they got notice for advertising private placement recently. They came for me for a resolution, and the case was they have made some WhatsApp group, And in the WhatsApp group, they were posting they are doing Series A, Series B, Series C. Whoever interested, join the crowdfunding. But the MCA, Ministry of Corporate Affairs, traced the advertisement and they levied the penalty of 2 or 2.5 crores. So don't advertise. You can present with a particular angel investor or a particular incubators, accelerators, or your family group or close friends. You can express your opinion. You can present the idea or you can create a pitch deck, but don't post it in anywhere. Now, after the pitch presentation, you need to negotiate with the investors.
Sorry to interrupt, sir.
Yeah, yeah,
Actually, there is one more session actually in line.
yeah.
So can this be winded up within 5 minutes, sir?
Yeah, I think hardly it will take 5 minutes for this slide.
Okay.
Yeah,
So later, yeah, we can
sure,
keep 5 minutes for Q&A
sure,
session.
sure,
That's it.
sure.
Sorry. Thank you.
Yeah. So you can pitch decks will happen. Then you need to negotiate with the investor. Then again, you need to negotiate with the investor for pre-money and post-money valuation. Then the term sheet will be issued. Then separate bank account you need to open. Then investors will wire the money into your account. Then you need to file some forms. Then you can utilize the money. But here, crucially, you need to review the SHAs, shareholders agreement, and term sheets properly. As you are an investor or you are incubator or funding, you are doing a funding, then you need to carefully review the agreement. And I can briefly introduce the legal risk. If you are a promoter or a founder, better you can have the proper structure in the MOA and AOA, and founders agreement, better you can have an agreement. If you are an investor, then definitely you should have SHAs. You should follow the due diligence. Then dilution, anti-dilution clause in the SHA. You need to follow these instructions. Then what are the legal risks with the competitors? You should protect your brand. You should take the trademark and data protection, trade secrets. If employees, what are the risks? So you may have the terms and conditions in the employment sheet. And what about the ESOP policies? You should be aware of ESOP policies if the company has the ESOP. And with the clients, again, you should have the deliverables and scope of work in the agreement. And regulatory authorities, definitely you should have a risk with the regulatory authorities. Better you can file the written within the due dates and follow the guidelines. And I think this is the last slide for this session. Thank you. Over to you, Ashvik.
Yeah.
And one more thing, if you have, I think since it's a time constraint, better have mentioned my name and mobile number. If you have any questions, please raise in a WhatsApp. Thank you.
Sure.
So the last the screenshot photo, can you just put it again?
Yeah, sure.
Previous slides. Yeah.
This one?
Yeah. Thank you. One second. Thank you.
Yeah.
Yes, sir. So thank you, sir, actually for the detailed explanation.
Yeah, I think
so,
it needs around some 2-3 hour sessions.
Yeah.
So I don't
But
know. I
definitely,
prepared
sir,
for 1 hour. But
we'll arrange for one more session so that
Yeah.
we can have it for 2 or 3 hours the upcoming days.
Yeah, sure.
So, dear participants, we are actually open for the questions Q&A session now. So, if there are any queries, we can definitely ask, sir.
May I speak? Hello?
Yeah,
Yes, sir.
yeah.
Yes, sir.
Yes, sir.
Am I audible? So my name is Tanmaya. We have a company by the name Aqua Biosolution. So we need to file ROC now. So is it required that we can do it with any CS or CA has to look into this?
Sir,
And what is the balance? Every audit has to be done every year for LLP company or how it is?
Yeah, so basically, if it is a company, private limited company, every year you should go for an audit from the chartered accountant, and ROC returns the company secretary can file.
May I contact you for that?
Yeah, sure, of course. I
May I
have
know where are you
mentioned.
based?
Yeah, I am based in Bangalore, Jayanagar.
Okay, okay. Sure, I'll contact you in person.
Any other questions? I think it's at 12 o'clock. Sorry for, I think I haven't
Yeah.
seen the time.
Yeah, it's okay, sir.
Yeah.
Anyway, so any other questions from the participants, please?
Also, I think you can display my contact number better if
Yes,
they have
sir.
any questions. Anytime
Sure.
you can ask anyone, if
Yeah,
you're
we are
future
going to,
entrepreneur or any
yeah,
students
we are
or
going to share it in the
entrepreneurs,
chat
please.
box, sir.
Yeah.
Your contact number as well as your email ID.
Yeah.
Yes, dear participants, any more questions? So one question from my end, sir.
Yeah.
What legal requirements must startup fulfill to operate legally? Hello.
Yeah,
Sir?
yeah. So basically, in the beginning, what I mentioned, in the general sense, startup means the company started initially
Okay.
in initial development stage, but as per the statutes, startup matlab the company within 10 years, and
Yes.
they have the proper idea of I mean the future projections and some turnover criteria is there. You should obtain the Startup India registration here. And if it is in the general sense, startup matlab any initial stage, they can go for whatever the legal structure what and I mentioned in the initial slides.
Okay. Thank you.
Yeah.
Thank you, sir.
Sir,
So
one
any,
more
yes, sir.
follow-up question I have. So, if we have decent turnover, I mean, decent means I can't tell any figure now. So, can I have availed 2 government grants and the product is selling now. So, can I reach out to you for a angel investor or accelerator funding or something like that?
Yes, sir. Again, I think the coffee board, the CCRI, Atal Incubation Center, they are all doing very great job. So you can contact them and you can contact me also if you need any legal support or if you need any contact, I can also help.
But what is the readiness for this investment? What are the documents we need to have?
No, sir, that is depending upon I mean, your pitch deck and whether it's harmonized between I mean, incubators or the government grant schemes. That we should see first. If it is matches, then definitely we can apply.
Okay, sir. Okay. And valuation, is there any particular protocol?
Sir, there is no hard and fast rule for valuation.
Good afternoon,
Valuation
sir.
report.
This is Savita from.
Yeah. Sorry.
Good afternoon, sir. This is
Yeah, good
Savita
afternoon.
from Atal
Yeah.
Incubation Center. I have one doubt.
Yeah.
What are the legal considerations should startups keep in mind when dealing with investor or venture capital firms?
Yeah. So basically, you should completely read the agreement, because in the agreement we may have the exit plans, how we will give the exit to the investors, or voting rights, or sometimes they may appoint their directors. So they will, I mean, someone if they invest, then definitely they will have some the control in the entity. So better to have a good shareholders agreement or whatever the debentures agreement, and need to follow the compliance part. That is the best method.
Actually, you are answering me that time.
Yeah.
So,
Yeah. Sorry, sir. Yeah.
yes.
So valuation, there is no need of I mean, there is no hard and fast rule for valuation. So I can say this is a backward calculation. First, you need to negotiate with the investors. Then based on the pitch deck or whatever the idea you have, we can set the back calculated. We can calculate backwards. We will arrive at the valuation price. This is especially if it is a DCF, discounted cash flow. This is all depending upon your future cash flow. So future budgets. So if it is something is depending on the future, whatever the value I can mention here. So valuation report is, it's a calculation. There is no, I mean, fixed methodology here. Lots of methods are there in the valuation.
Okay, why I asked this question is because so we need to apply for pre-series funding. So after that only A and B series funding
Correct.
open up. So
Correct.
so now pre-series funding we are applying. That's why the reason they are asking one upload column for our
valuation report. I think they have asked the valuation report. Now,
that is one. Whether
yeah,
a CA will do that, again CS will do that. That is first question. And second one
sir,
is balance sheet also they have asked.
yeah, balance sheet.
Last
I
3
think
years.
yeah, balance sheet. I think you have already filed the balance sheet with the ROC or anywhere, so you can take the 3 years balance sheet easily. If you give me the company name, I can also give you the 3 years balance sheet of your company if you would have filed already. And valuation report, as per the Companies Act, registered valuer will do the valuation. Either he may be CA or CS or CMA. If it is he is a registered valuer, he will do the valuation as per the Companies Act.
Sure, sir. Thank you. I'll contact you in person.
Yeah, sure. Ashvik sir, any other questions?
Yes, sir. Any questions from the participants? Yeah. But anyway, sir, we are going to share your email ID and your contact details in the chat box as well, and even to the mail ID. But yes, so any questions from the participants? Any more questions? I think because of your detailed explanation, I don't think there are much questions related to this thing.
Either it is clear or confusing.
Yeah. No. Actually, each and every topic was actually cleared, explained clearly. And, yeah, you have taken so much of time in explaining each and every topic very slowly. But yeah, I think they might have understand this thing.
Yeah.
But anyway, definitely we are going to have one more session in the upcoming days with you, sir. Thank you very much on behalf of Incubation Center, sir. And yeah, dear participants, I would like to thank you as well. And also would like to inform that we are inviting applications for this incubation program. And the last date of application will be like July 15th. So those who are interested in applying, especially, and if you have a startups or idea related to coffee sector, you can definitely apply to our incubation program. Also, there is one more webinar in the upcoming days. Like on 19th, we have one more webinar. Anyway, that details will also be circulated in social media. If you're interested, kindly do join to this webinar. And that is it. I just want to say. And we can go for vote of thanks. And Amit, can please do the vote of thanks. Thank you very much, sir, on behalf of Adel Incubation Center, sir. Thank you. Amit, please.
Good afternoon, everyone. Myself, Amit, as an intern in AIC. I extend our sincere gratitude to Mr. Bhaskar Bhatt for an enlightening session on the Thought Cafe webinar series. On behalf of AIC CCRI CED, we thank you for sharing your expertise in legal aspects related to corporate law and funding compliance, and also providing support to the entrepreneurs. Sir, your invaluable contributions are deeply appreciated, and we look forward to future collaborations. Thank you very much, sir.
Thank you, AIC and CCRI Coffee Board. Thank you, Ashvik and Praveen sir, or entire team. Thank you, and thank you, audience.
Thank you all. So also, dear participants, you are kindly requested to please fill in the feedback form that is being shared in the chat box, and also you can access our recent newsletter by the QR code that has been provided, and in the chat box we have shared the link. So thank you all. Once again, I'd like to thank you, sir, for the wonderful sessions. Thank you. Namaste. Sir.